All right, guys, welcome back to the Financial Summit's YouTube channel. Oh, are we live here?
Let's
We're
see.
live. Okay, cool.
Looks like
And yeah, we had to try to get Mark on. Third stream of the day, did one with Matt McGregor this morning. I then joined Chris Dunn's YouTube channel. And like based on everything I said on Chris Dunn's channel, I really wanted to do one more to kind of solidify it with Mark Wood. I'm curious what you think, Mark. Is the top in? I mean, like when we decided to do the stream, the price was sitting at like $86,000, right? And I was ready to debate, is 89.9 thousand the top, for like a week or two? Should people have taken profit last night? Should they jump out immediately? Are we going to go back into the 70s? And now that we're on the stream, now that we got it rolling, the price is about to break 90,000. And I really wanted to highlight everything I said on Chris Dunn's stream. Maybe I'll play those clips that I sent over to you to watch before the show. But give me your take real quick before we go to the charts. But I think I'm going to play those clips first as I keep an eye on the price. I'm also going to pull out the live chat and make sure everything's going well.
Well, we are coming into an MRI top. However, I I have a really simple method of just watching Bollinger Bands, and we can take a look at that. And it's looking like we're going to get a green candle closing on top of the upper Bollinger Band again, which just the TA on that suggests the price is going higher. So we might actually have a new all-time high today or tomorrow. But I would start getting a little bit more cautious in the what is today? What is the day today? Tuesday?
Tuesday.
Yeah, Wednesday, Thursday, Friday. By the end of the week, depending on what we see, like if you're trading and had a really solid trade, might be a good time to take some profit or exit 25, 35%. I'm not trading. I'm sitting. I am likely, this might sound crazy, but I'm probably not going to sell anything until the price is significantly above $100,000. And if it doesn't get there, then I'll reevaluate that. But I've just had a long-term accumulation strategy. We can talk about a little bit as well.
Yeah, we're going to talk about that. Looks like, no, we haven't broken all-time high yet. I have the all-time high as 89,957. We're not there yet. We're about $100 shy right now of that mark. Before we get there, people are asking me to pull up the 3-hour chart. Okay, Mark, remind me to pull up the 3-hour chart. I had these 3 clips ready to go that I sent off to people. I'm gonna play them real quick. Let me turn on computer audio. I'm gonna make the speed 1.5 for the live viewers, and you can just mark the clips, right? I'll throw the clips in the video description as well. Wait, how do you do computer audio? Where did I go? Hold on. Wait, what is happening? Huh. Something is off. Oh, I'm not screen sharing. That's why. That's why it's thinking. Okay, I have to screen share first. Now I can do computer audio. Share computer audio. I know Zoom made it very difficult. Okay, so let's give this a shot, and hopefully the volume is good. I'm gonna set this to 1.5 speed, and I'll throw these links in the video description as well for you guys. I think there's just 3. Oh wait, wrong link. This link. There you go. And there's 3 clips. This is from a show a few hours ago. And Chris Dunn will pull up the charts. Maybe I'll put it on the big screen here. I don't think that's the big screen. Here we go. All right, let's listen.
We were just doing some like pre-market price action here, man. What do you think's going to happen? Are we going to continue this parabolic rip? Are we going to get a nasty pullback? What are your thoughts?
Man, when I went to bed last night, it was literally, I went to bed right at the all-time high. It was 2 a.m. Eastern time. I go to bed. I was telling everyone that watches our channel on yesterday's show that my indicators, my MRI is calling for a top on Thursday, which means on Wednesday is probably a good time to get out if we keep pumping. So based on my indicators, the perfect exit would be either late tonight, most likely tomorrow, if we keep going higher. So the one thing I wanted to avoid is a pullback today. Like had this candle flew up today, I'm pretty much telling all my followers that I'm getting out. Like people can do what they like, right? Like I don't tell people what to do. I tell people what I'm doing, right?
Right.
And then they're free to make their own decisions. So I was looking to exit really, really significantly later this week because my weekly indicators are showing me a top next week. And I always tend to get out potentially on a candle before the topping candle. These are time-based indicators, but they only top when you have consecutive increases, but they're based on time. Because I'm one of the few traders, I put as much emphasis on time as I do on price. And I'm also used to be an options trader where you have to focus on time as often as you focus on price. So this pullback right now is bothering me a little bit, but market is not open yet. Yeah. And I still have hope that today is going to be another positive day, or at least a very minor pullback. I still think we can close today above 88,000, with tomorrow and Thursday pushing into new all-time highs. I just don't want to be biased because, that's my position and that's what I want. And that would make my indicators top absolutely perfectly. But I'm only going to make my decisions after 11 a.m. There's just the 10 a.m. reversal is real. I talk about it all the time. Yeah. And if we're going down into 10 a.m., there's a high probability that we're going to reverse. I don't know if we're going to reverse all the way to new all-time highs, but I think there's a high probability of reversal. The stock market looks like it's going to open nicely, and it could be another bullish day for the stock market. I still think we can make a new high later this week. And my perfect exit would be at the end of this week, somewhere in the $93,000 to $94,000 range for Bitcoin.
Gotcha. Yeah, it's interesting because we have 7 green days in a row, and we've got this massive gap, like a 5% gap on the CME.
I think that's it. We're going to talk about the CME gap. So those were my thoughts this morning. There's 2 more clips, one at 22 minutes.
As well. What do you think about that?
100%. But I still wanted to see the top com later this week. I didn't want to see a top com
happens, but I think that is a very likely situation as well. What do you think? Right. Between 70 and 80% actually retested the breakout. So
pullback target off the table. Okay.
Yeah. And so I ran a back test at one point for Bitcoin breakouts, and it was something around in between 70 and 80% actually retested the breakout. So I think that's pretty likely, right? Is like we got this run. Not only is there the gap close, but we could retest that 75K zone before continuing. Now, I mean, we could run much further before that happens, but I think that is a very likely situation as well. What do you think about that?
100%. But I still wanted to see the top com later this week. I didn't want to see a top com on a holiday Monday because yesterday was not only, it was like half holidays, like Veterans Day is like a weird holiday in the US. It's like some things are closed and I think markets were open. It's just like one of those weird holidays. And I just didn't want to see a top on a Monday. And I would rather see a top on a Thursday, Friday, maybe on Wednesday. And yeah, I would have been exiting, and I probably would have kept exiting if it would keep going down, thinking that you can get back in, maybe not at 72, but at like 78.
Mm-hmm. Yeah. I think today and tomorrow will be really telling. Like, do we get a mid-morning reversal where we pull like a red to green and then start to get really overextended and run for that 100K this week? Or is this a pivot high or a retracement back to retest the breakout? I think I'm looking at the first few hours of today as a guide for that.
The next thing I'm about to say is really important. And the reason why I'm replaying these videos is because I don't think I can repeat myself in a better way than how I stated it on the podcast this morning. And that's why we're playing this again, because I don't think I can state it any better than what happened this morning.
You guys have anything else that you would look for to be a guide for either a continuation or a pullback?
No, I 100% agree. I think 24 hours from now, maybe 28, like 30 hours from now, a little like in the afternoon tomorrow, we will know if that's a top or not. And I think that if we're anywhere above 88,000 by this time tomorrow, I think we are going to go higher into the mid 90s before the top comes. And if we're sitting below 86,000, which is the current price right now, I think the top's in. I think that's basically going to be my barometer. I know the price could be above 90 later today, and it can be below 80 later today. But if we continue this, current price range, I think that by 11 a.m. Eastern time tomorrow, if we're above 88, I think we're breaking all top. I think we're going into the 90s this week. And if we're below 86, I think the top is in and probably rebuy in the 70s.
Mm-hmm. Yep. Makes sense.
No, I agree with that. I had a break of around 85. If we're below there, I would.
And one more clip. One more clip we got to play. I'm not sure what the timestamp is on that, so I'm gonna exit this and I'm gonna paste it in here.
Some trend data start to pop just over the past like week.
Oh, but what do you search? What's your search term? See,
Just
I don't like
Bitcoin.
searching for Bitcoin because Bitcoin works everywhere. I like searching for buy Bitcoin
Should I buy Bitcoin?
Buy Bitcoin. That's a good
and
one.
then go back a bit.
Yep.
Okay, so it is rising. So most of the text that I'm getting over the last 24 hours is people asking me when to sell, not
Same.
like how do I get in. And also, I'm on record saying we're not going to break 100,000 this year. I'm still sticking to that. I think that we are going to top before 100,000, and we're going to have a pullback to maybe even test back in the 70s, and that takes time. I think the 100K is being broken next year, not this year. The question is, did we already top at 89.9? Or are we going to make it into the 90s before the top comes? I don't know. Maybe I'm biased because I still have my long and full. I still think we're going to push into the 90s over this month, over the next week or two before Thanksgiving. We push into the 90s and then have a more proper pullback than what we just had. And right now we're back to almost 87.5. And like I said earlier, all we got to do is hold 88,000 for the next 24 hours. And I think we get one more breakout, but I do not expect that breakout to break 100K. I think that breakout tops before Thanksgiving under 100K, and we get a proper pullback. I don't know if that's down to 81. I don't know if that's down to 71 or 76, somewhere in there. And by the time it reverses and goes back up, we're breaking 100K the following early next year, like January, or like around Trump's inauguration or something, January 20th. That's kind of my feel for the market right now.
Yeah, I think the odds of that are probably higher, right? But what kind of makes me think otherwise is that we've still got like 48 or 49 days left in the year, and we only need to move about 12%. So I think that could happen in one day, right? We could have just one parabolic day that rips, and then everybody realizes what's happening and they pile in. But yeah, I'm not like betting the farm on that, and I still have a lot of cash in case we do get a pullback. I'm going to be buying some dips.
Right. I don't have any cash right now. This is why I want to try to time this exit properly before that happens. And and we just had that candle, right? The question is, are we going to have another candle? We actually had two of these candles, right? One on Trump's inauguration day. I don't consider that the blow off top candle, but we just had that candle yesterday, right? So the question is, does the market have one more of those candles in it? And I'm leaning towards no. I don't think we're going to have another candle like we did yesterday. I think we can still go higher, but not like yesterday. I'm not expecting another one of these candles this month. Maybe, you know, for Christmas, but not this month. And yeah, that's kind of.
Come on, guys. Let's all just market buy at the same time.
Yeah.
Boom.
That's it for re-listening to myself from this morning. Let me go to a normal screen. Okay, so after listening to all that, I'm going to pull up my charts. Did we break all-time high? We did not. We did not break the all-time high. We came close, and then there was a rejection. But I'm pretty sure we're going to break it later today. Mark, any comments on everything I've said in the stream this morning? Any thoughts on that? And then we'll go through that, and then we'll have you pull up your charts. You're muted.
I agree with a lot of what you said. The one thing that I would be happy to debate on is a test back into the 70Ks. I'm skeptical of that. I think I mentioned on the one or maybe in the last two streams that Bitcoin is in price chase mode, and it does not give opportunities during this period to come back in at a reasonable entry after breaking out. And we can actually take a look at
so this is why I take the opposite view, because Bitcoin is in this breakaway mode, and a lot of people are going to get in right now, and a lot of people are going to get in at 98,000 expecting to break 100, and there'll be nobody left to buy, and they're going to get burned. Okay, so because of that chase mode that we're seeing right now, that's why I think it will go down into the 70s, because there's not a lot of people right now waiting for the pullback for the 70s before they get in. I think the number of these people is very, very small, because 70,000 is expensive for a lot of people. Like, if these people were not already in, they're either going to jump on board. They're not going to sit there and going, no, 83,000 is too expensive. I'm going to wait till 72. It makes no difference at this point, right? It's not like it's at 40,000 and you're waiting for it to pull back to 25. This is very, very different. I don't think there's anyone sitting here waiting to buy their first Bitcoin or waiting to significantly get in on a dip to 72. It just makes no sense to me.
So yeah, one thing that could kind of fall in line with your argument is this run happened over the weekend, which has created a massive CME gap. And of course, you know, we saw FOMO from the ETFs. So there could be some shaking out of those late ETF buyers for sure. And there is something there. The CME chart is very interesting to me. We don't often look at it, but it has a lot of information. And there is one move that strengthens your argument that took place between December and January of 2023, 2024. There was a breakaway. There were several breakaways in CME in October of 2023 coming out of accumulation. And then there was a massive gap. We'll take a look at it when I share my screen. But December 2023, there was a gap at 39,000 and it opened up at 40.5. There's about a 1,000 gap. Price continued to go straight up for a month, but it did come back and fill it in January. So you are right. If it's going to happen, I would expect that it's not going to happen anytime soon, and it's going to happen after the MRI weekly top begins to correct.
Okay, so on the CME gap, right? The current gap reminds me something like a gap that we had in November of 23. It was a big gap. It was followed with a big day. It was a breakout. We then went consolidated, went higher still, and then closed the gap so quickly and recovered and went to a new high.
Yeah.
That's the kind of close I envision, where we go a little bit higher next week, and not next week, this week. We go a little bit higher this week. We top with the MRI. We pull back a little. We consolidate a little. Sometime in December, we have some kind of a flash crash down to the mid-70s, close this gap, and then by end of January, we're above 100,000.
So a rise up into the mid-90s as the weekly tries to top, and then a correction down to the gap. It would be about a 20% correction, which would be perfectly in line with what you would expect for Bitcoin, you know, in a bull market. So I'm neutral here. Here's what I do have to say about CME gaps, and it's funny because I'm normally very adamant about gaps filling, because Bitcoin still fills CME gaps at a rate well into the 90%, well into it, probably 95% or higher still. So just from a statistical standpoint, there's a pretty good chance that gap is going to fill. However, if we're at the end of the day on Tuesday after the gap came over the weekend, I don't even think about it. It just gets tucked away and put on the back burner. Then what happens is when there is a correction, let's say the gap is to the upside, it's the same holds true. That is an immediate area of interest that would be almost a close your eyes and buy if we see an incredibly strong drop into that range. And what happens is people do not pay attention to the gap, and they get convinced that the price is going to continue to drop, and it will do a V bottom reversal right on that CME gap and go away, which is basically what we did see, what you're talking about in November, December of 2023. So as far as here we are Tuesday, there's no way that gap was going to get filled this week. It's not going to happen. So we just kind of tuck it away as a price range to keep in mind that was going to be around 77,000. Let's just call it 77K. I would imagine that is going to be a strong buy zone if the price drops back into there.
No, I'm not expecting the gap to close this week. Maybe on Friday. But man, I want my exit. I want my exit above 92,000 on Wednesday or Thursday. I'm still looking for that. I'm not going to say I'm necessarily expecting it, but that's what I'm looking for. And yeah, but I don't see a reason to sell right now.
Yeah.
I just don't. I want to point people's attention. Like when you look at this chart, right? What candle jumps out at you, Mark? This is a weekly scale for the last year and a half.
Well, there's a couple that do. There's
Right,
one.
so yeah, go ahead.
So there's one in June of 2023 that was a massive rise that if we look, the following weeks came back and completely filled in that liquidity gap. That one stands out to me. And but if you look then after October, early October, strong candle, looks like, yeah, those two right there. Those two, the price just ran away and never came.
Right.
And look, these two candles that have printed, the last two candles that have printed, yeah, right there and there, are very similar to the two I just showed.
Right.
Yeah.
So I don't consider them similar. The reason why I don't consider them similar is because these two candles were a breakout of consolidation.
Yeah.
These two candles are a breakout from a downward trend.
Yeah.
And this downward trend, to me, this breakout is happening after the price has already moved 25% off the bottom. These two candles are happening after the price has pretty much not moved at all off the bottom. And that is why this had a lot more leeway to run away and also had no reason to come back and backtest. Obviously, we're not going to come back and backtest 56,000, but we'll only have to backtest the all-time high from the March area, which took 6 months to get over. The other thing I really want to mention when I pulled this up is, because of the MRI, this stands out. And only because of the MRI, well, not only because of the MRI plus the ETF launching right here at the top, I was able to get out and then rebuy much lower. But if I remove the MRI, and if I turn on the Heikin Ashi candles, oh, it actually still exists. Interesting. Let me put the normal candles back on. This 3-week stretch looks almost unnoticed, but in reality, it was a 21% correction. And this is what I pointed out on a recent stream with Matt, that in hindsight, this is completely unnoticed, but in reality, it was a scary almost a 22% crash in a short amount of time that probably liquidated a lot of bad trades to the upside.
Yeah, it definitely would have taken out a lot of long stops, in the 40K range. And what's interesting, Tone, is I just laid out a scenario of a run to 95K, a drop to fill the CME gap, which would produce that exact 20% drop as well.
Right.
So yeah, I don't disagree.
So this is what I'm expecting, right? I'm expecting something like that. I don't know where it's going to come from. Like, I don't know where the top is, but I am now at the moment, I'm confident that we are going to break 90K today or tomorrow.
Yeah. So go back to the weekly real quick. I have one question on the MRI. Okay, back to the weekly candle you were talking about. Can you explain what the number 2 and the down arrow is?
So the down arrow is the same. It's an MRI top. After you get enough consecutive candles to get up there. The 2 versus a 1 means that it's a second consecutive MRI top. That means there was never a break in the action. This is one of the biggest differences. People ask you, what's the difference between MRI and Tom DeMark's sequential? This is the biggest difference. There are numerous differences between the MRI and Tom DeMark's main indicator, TD. The biggest difference is this red arrow and this 2 will never show up like this on Tom DeMark's indicators. This is the big difference between the codes. So it's not like a ripoff. There are significant changes because in Tom DeMark's system, once you get to a TD top, you stop counting until you flip into a red count. I reset the count and start the count up again right away. And these second and third consecutive tops have given me awesome calls. And I can go back to how I realized how important it is to continue the counts, which Tom DeMark doesn't do. And that happened with the S&P. And there was one specific, trying to think of which year it was. I think it was 2016 or 2017 top. Let me go to the weekly scale. I'll recognize it when I see it. And I got to go back all the way to, man. Oh, no, it's 2012 is too far.
Yeah, I thought I just saw it, actually.
It would have been, maybe it was the daily scale. Let me try the daily scale in the 2017 top. Let me go to 2017. Yeah, right there. This is where I kind of discovered how important it was, because Tom DeMark's indicators did not top the S&P 500 on this day of January 26, 2018, and mine did, along with an extension C.
So if you go back to the beginning of 2018, there was an extension A, B, C, C, A. No, go back to where you were. There, like on that secondary, on that second MRI top, there were already so many other extensions printed, and the daily, the current Bitcoin daily chart, it's not running to a second consecutive, but there are several extensions, which is a bit of a clue as well. It is telling you to be careful. It's
right. Now, I do not kick off extensions on second and third consecutive MRI tops, but it was this move. It was this specific MRI top on the S&P that was followed by a bearish Harami candle. And I was already skeptical right here. And once we gapped down the following day, this was a huge call for me. And I was calling this top. And this solidified it. And this is before I put the MRI code together. And this kind of solidified that I must have these second and third consecutive MRI tops in mind. And with each one, I take it more and more seriously. If we get to a third consecutive one, I take it more seriously than the second, and I take it more seriously than the first. And then there was one example. It was literally the CME stock. The CME stock had 5 consecutive weekly MRI tops. It was insane.
Wow.
And this is, of course, a long time ago. Weekly, yeah. Somewhere. CME group. Weekly chart. Where was it? Maybe it was daily? I can swear there was 5 consecutive MRI tops. Somewhere. Let me try. No, daily would be strange. I have this was in my man, never do this shit on live air. Maybe it was monthly? Couldn't have been monthly. It's way too much. Man, I gotta find it. I'll find it while I'll glance for it when you do your charts, Mark. I'll find it. There
So
was
tell,
5 consecutive MRI tops. I've never seen that before, but I can swear it was on a weekly CME stock, and the MRI doesn't retroactively change. It's not like Elliott wave. I mean, once an MRI prints, it stays there forever, unless the data changes. Then it'll change. If the underlying data changed, and splits would not do that. So I'm not sure. Oh, it wasn't CME. I'm sorry. It was, what's the other one? CBOE? Right, it was CBOE. It wasn't CME. It was CBOE. There it is. I
Yeah.
got the future. I got the exchanges wrong. There it is. Here's your weekly. Yeah, I was wondering why it just kept going up and up and up. And what I would do in this case is I would exit on the MRI and buy back on a green star candle that follows the MRI. Buy a sell on the MRI, buy back on a green star candle. Sell on the MRI, buy back on a green star candle. And then eventually you sell on the MRI, and look what happened. Eventually when it hit the 5th.
wow, five consecutive runs on weekly.
Yeah, 5 consecutive weekly runs, and then it fell 40% in 2 weeks.
It's almost an entire year. It's 45 weeks, almost an entire year of only. It's like, what was the percentage rise from like the low in October? Just pick the low in October.
Well, I'll pick the breakout area, right?
Yeah.
So I say it broke out around here. Like, here's your breakout right there.
Yeah.
So from the breakout, I mean, this is where you would buy, right? You would buy this breakout. So from that breakout, it went up 90%.
Wow.
And then it lost half of that in 2 weeks.
Yeah. Very, very hyperwave-ish type.
Yeah.
So Rusty made a comment in the chat I saw. He said, I can't wait to buy a house for 1 Bitcoin. And I love this comment because it's actually something I wanted to talk about really briefly today. So currently, in 2024, after the run up of the ETFs, it was first of all, the average median income house price is, I believe, around $430,000 in the US. I'll take a look at that really quickly, but it's around 430,000. It was costing 6 Bitcoin earlier in 2024. Currently, at the current price, it takes 4.8 Bitcoin to buy a house. I believe it's going to be more close to 4.3 by the end of the year, because I do think Bitcoin is going to be trending close to 100K. But really, really briefly, I happen to have this pulled up. I can't show it on my screen, but I have these slides saved. 2016, year 2016, average median price in America was 288,000. It took 664 Bitcoin. 2016, 2017, average median price $300,000, 510 Bitcoin. 2018, $308,000, 354 Bitcoin. 2019, 318. So it's staying around 320,000, down to 200 Bitcoin. Let's skip ahead to 2021 after the halving. Prices rising to a 355K median, dropping a tenth to only 35 Bitcoin to buy a house. And here we are in 2024. Average price is 434,000. It takes 4.3 Bitcoin at the current price. I think you're going to be able to buy a house for 1 Bitcoin by 2033.
By 2033, I think you'll be able to buy a house for a Bitcoin way before that.
Well, that's also, I'm thinking that the median price of a house is going to be $1 million.
No, I don't.
It might be it.
Well, and in 2033, the median price might be $1 million, but then Bitcoin is like $8 million a coin by 2033, right? So I'm not expecting house prices to keep rising like this, man. I think inflation is done. I don't think we're going to get much more inflation. And I think housing prices are going to come down. They're not affordable as it is.
No, I agree. We are going to have a crash, but we got to realize,
Sure,
yes,
especially if Trump starts, kicks out 10, 20 million illegals from America and doesn't let a new 10, 20 million illegals in. I'm not saying illegals are coming in with, loads of money buying these houses, but they do stay somewhere, right? And I mean, that's a lot of empty places and overall pressure on the real estate market, plus the commercial market that is getting destroyed. And all those commercial buildings in city centers, they're all going to be converted to condos. I don't see house prices continuing to rise. The interest rate's going to stay high. I would say the house prices will barely rise during the Trump administration.
well, without getting too political, there is no question that the illegals are having an effect on the housing prices because they have received money and landlords have been able to charge more for rent. It's pushing other people out, and then that is eventually driving up the price of the house. So that has been part, not all, but a small part of the rise in the housing costs. But the thing is like the house prices are not going to go down. We might have a correction because they are very overpriced right now, but overall over the next decade I still think prices are going to go up. My long-term projection, and again I think I'm conservative on this, is I think that Bitcoin can hit $1 million by after the 2032 halving in 2033, which is not that long away. It's 9 years away. Some people think that it could be way higher than that. I don't know. I still think it's going to take some time. So, but you got to realize that's a $20 trillion market cap. It's somewhere around 18 to $20 trillion needed. I gotta fix my video. It's jacked up. There. So with the housing prices being 450,000 now, I don't think it's unreasonable to think in 10 years that they're going to be, pushing into the $600,000 or $700,000 range. So my point is, here's how to simplify it. There was going to come a day, without any doubt in my mind, that you are going to be able to buy a median priced home in America for 1 Bitcoin. And then there's going to come a day where you can buy a house for 0.1 Bitcoin. Down the road. Do you agree with that?
I do.
Yeah.
I mean,
you got, what's crazy is that after each halving cycle, like from the first year that I started railing those numbers off, I think that was 2016. It literally costs 1/10 the amount of Bitcoin right now, as the prices of housing has doubled. So your Bitcoin cost is a tenth, as the dollar value of the house costs twice as much. That is the buying power of Bitcoin protecting your dollars in action.
Right. So the other question is, man, I always felt my acceleration lines were kind of high. I wanted to update the code to drop them a little bit lower. I felt they were a little too overextended, the acceleration lines. And yet, every time we crossed one of these weekly acceleration lines, whether to the downside or to the upside, it's always led to, significantly higher prices. This is probably the least. It's probably the least one, and it still went up like $10,000, but not right away. But I really wanted to drop them down. I got to review this code. Someone even asked me the other day, Tone, in your educational video, you talk about making them tighter. And I said, yeah, but I never got around to it. But I thought this one was so far away and yet we broke it and we just flew right over it. And I still think we're going higher. I still think we're I think we're gonna top closer to 94.
I track those pretty regularly. I think they're fairly accurate. I don't know how you could improve upon having them offer better information. But could you perhaps briefly describe to the viewers how that MRI acceleration gets calculated?
Sure. So right here, this was a pretty. I'm surprised this one is actually this low. So the way they're calculated is, here is a move. Let's talk about this last one. So here is a move into an MRI top. What I do is I grab the candle that made the highest point, and I look at how far this candle, the range of that candle, that's 12.5% for $9,000. And that's where the line would be, 12.5% for $9,000. So if we look at this one, this candle fell $7,000 for 15.5%. So we go up, and I'm surprised this is this low. This should be higher, a little higher. Maybe not. Yeah, they're 15, like smidge higher. That's why by eye, I'm like, okay, this one should be higher, but it's pretty close. That's how they're calculated. In this case, the top was also made on this candle. So you go down 8.5% for 3.2 thousand. So that's where it is. Yeah, this one seems okay. No, I didn't do. I mean, like, I think when you put it perfectly at the top, when you zoom in, that's what it will be. So that's how you calculate the acceleration line. And I feel that it's a little too far away from that candle. So I'm not sure how I'm gonna bring it down, but I was gonna, play around with some math.
So someone in the chat, Moonshine Fuel in the chat said you could actually buy a house with 1 Bitcoin right now. Maybe not in the USA or the most desirable place, but that is true. You can definitely buy property. And this is what I love to think about. Like, if you were bold enough and brave enough, and you were not like already a hodler from years before, and you bought the fear of the COVID drop, which I did do. I bought the bounce pretty aggressively. You could have bought 1 Bitcoin for $5,000, and that $5,000 investment could get you a house, in some nation outside of the U.S. or even maybe in a rural town in the U.S. or something like that. So $5,000 for a house is not a bad deal at all.
Mm-hmm.
The other thing, there was another question asking, so who is BlackRock? Who is BlackRock, the ETF? Who are they buying for? Who are their clients? Are they
Us? We're their clients. I'm their client. Well, like, anyone who buys the ticker IBIT, IBIT, that's their client, right? So every single person, probably 1 million Americans, buying it through all kinds of brokerages and exchanges. Not exchanges, brokerages, right? Anyone, any American, many foreigners, anyone that has access to American trading markets. You can use Interactive Brokers. You can use Charles Schwab. You can use I don't know, Ameritrade. Well, whatever. You can use your bank, right? A lot of banks let you open a brokerage account. Anyone that buys the IBIT ticker, that's their client. Like, they don't know your name. They have no idea who you are, but they need to have certain number of Bitcoin to back every single IBIT share. And it's known percentage, right? So if we look at over here, looks like Google formulas aren't working very well today. So the only ETF that kind of mimics the price of Bitcoin exactly is ARK. So ARK Invest, you can see that their ETF costs almost $89. So in their case, you can see how the number of Bitcoin, 49,000 Bitcoin, corresponds to 49 million shares. So you can do the math real simple, right? Equals number of Bitcoin divided by the number of shares. And you see that, let me drop the percentage here. And let me round this number. There we go. Yeah. So you can see how they're holding approximately 0.001 Bitcoin for every share that exists of the ETF. Okay. Now, if I do this, and now you can see how many shares of Bitcoin each ETF has to hold to back their shares. This is going to be an approximate number. So if they're buying more Bitcoin, if this number, you know, next week or whatever, becomes 60,000, they're going to have a lot more shares. So it's not like a stock, okay? They're constantly issuing and removing shares from the market. When you have a stock like Apple or MicroStrategy, they don't issue new shares every single day, right? They have a certain number of shares. And but that's not what happens in the ETF. In the ETF, when there is more demand for the shares than there is supply, they have to add additional shares. This is why they constantly add and sell Bitcoin on the open market. And right now we're in a bull market, so they're constantly creating more shares every day. This number of shares changes every single day, just like the number of Bitcoin they hold changes every single day. But when the number of Bitcoins doesn't change, remember, they don't change every day. So for example, right here, Wisdom Tree, because no one trades this damn thing, they have not increased the number of Bitcoin in their holdings. Therefore, they have not increased the number of shares that this ETF has. Right here, Valkyrie doesn't always buy or sell Bitcoin. And here is a Grayscale Mini. For 2 days last week, it did not add any Bitcoin. And on Monday, neither Van Eck nor Valkyrie added or removed any Bitcoin. So on these days, no new shares were created or destroyed. No new shares were created or destroyed by these two ETFs. Because the number of Bitcoin to back each share has to remain constant other than the fee that they charge. And the fee they charge is very small. So that's why over here, these numbers are kind of changing in real time, but once a day, they reset these numbers. And that's why you see it 0.099 now, right? So again, I'm kind of averaging here. But anyway, I think you guys get the point how the ETFs work, and anyone can hold this ETF. Therefore, BlackRock is buying Bitcoin on behalf of their ETF holders. And if there is more demand for the shares than supply, they have to issue more shares and hence buy more Bitcoin. But it's true in reverse. If there is a fire sale and everyone is selling these shares, they will have to remove shares from the market and therefore sell Bitcoin on the open market.
So Tone, I think another part of the question to be cleared up is BlackRock buying ETFs? Is the BlackRock ETF buying Bitcoin only on behalf of retail clients, or are they actually buying for other institutions, like for instance a mining pool, or some trust or retirement fund or something like that?
Not that I know of, right? Because it makes no sense. Remember, BlackRock, they're not a Bitcoin custodian. They don't even hold their own Bitcoin for their own ETF. So what's the point? Anyone that needs Bitcoin can just buy BlackRock's ETF. Fidelity, on the other hand, they're a Bitcoin custodian. If someone wants, Fidelity to hold Bitcoin on their behalf because they have to for regulatory purposes, then Fidelity could go ahead and buy Bitcoin and, charge a fee to hold on to it for another entity. But I don't think BlackRock does that. Now, BlackRock has hedge funds, right? All of these big banking institutions like BlackRock has their own subdivisions, just like Goldman Sachs. They have their own subdivisions that invest and trade. They have VC divisions, they have hedge fund divisions, and that division can certainly buy Bitcoin itself to hold, for their own entity. And that entity could have their own investors, like investors in a hedge fund, and then a BlackRock hedge fund could, of course, they can buy the BlackRock ETF shares, or they can buy Bitcoin itself. I would think the BlackRock hedge fund would simply hold the BlackRock ETF because it helps the parent company BlackRock. And as far as the investors in the hedge fund are concerned, I mean, they don't care. All they care about is the return, right? They don't care whether the hedge fund is holding real Bitcoin or is holding the ETF. They couldn't care less. They just want someone else to make their investing decisions for them. But if BlackRock didn't have an ETF, then the BlackRock's hedge fund would likely hold the Bitcoin itself instead of holding, say, Grayscale, because why would they assist, a competing company?
Okay, so another thing really quick I wanted to mention, I did see on Twitter yesterday, on X, several people talking about Bitcoin and silver. Currently the market cap of Bitcoin is roughly 1.76 trillion. It might be as high as 1.8 trillion, depending on where you're getting your information. And with the price of silver dropping over the last couple of weeks, I believe that gold is currently holding a higher market cap than silver. It is flipped silver for the time being. I think in order to say that with conviction, we would have to be watching Bitcoin hold $90,000 consistently. But I find that interesting. It's working itself up the ladder to become one of the most valuable assets in the world. It already is. But the next to go after is Apple and Nvidia at 3 trillion. There might be one stock stuck in the middle there somewhere. Maybe a Microsoft, but this is interesting. It's got a ways to go.
I really don't like comparing Bitcoin's market cap to stocks. I don't like that comparison. Now, comparing Bitcoin's market cap to silver and gold, that makes more sense to me. Now, silver, of course, topped on an MRI top with an extension B the following week, and silver is going down. As everyone knows, I am very bearish on silver relative to gold. I think that silver will struggle to break $50 a share as gold breaks $4,000 or goes to $5,000. People just don't understand that if gold is at 5,000 and silver is only at 50, that's a shitty gold-silver ratio. That's a gold-silver ratio of 100. And then when gold pulls back from 5,000 to 4,000, silver is probably going back to $20. And I continue to reiterate that silver is a shitcoin relative to gold. And if we look at the gold-silver ratio, it's going to break the all-time high. because gold's going to go to 5,000 and silver will still be stuck under $50. And there's multiple reasons for this. Two in particular. One is silver is way more useful in industry than gold is. Gold is too expensive to use in industry. I mean, Elon Musk probably uses it and NASA for like space satellites, but that's about it. Gold is very expensive to use in industry, so the industry doesn't use it. Now, the industry uses a lot of silver, but only because it's cheap. The moment silver starts breaking at $40, $50, the industry stops using silver and they start using other alternatives. And I know that people don't believe it. People are like, well, your cell phone must have silver. Well, the answer is no, it doesn't have to have silver. It has silver because it's not too expensive. But you don't want the price of your cell phone to be it's already $1,000. I was about to say $1,000. It's already $1,000, right? You don't want the price of your cell phone to be $3,000. And that's what will happen. If the cell phone industry continues to use silver in their product, a $50 price of silver could cause your cell phone to be $3,000. And either you're going to pay for that high price of silver in other ways, or the industry is going to use cheaper alternatives. Not to mention, silver is a lot easier to mine than gold. So the moment silver becomes expensive, a lot more silver gets put into the market and a lot more silver gets mined. That's why silver can't break its all-time high from the 1980, for fuck's sake. And gold is at a new all-time high every day. People really have to, slow their roll on silver. I've been saying it for a decade. Me, Max Kaiser and I have had huge arguments over this.
Tone, I agree with you that we shouldn't look or even give consideration that Bitcoin is acting or perceived as somewhat of a stock. However, I do believe that it's worth taking note of how the market caps do match up, because it's a sentiment thing. It's like an emotional sentiment thing where people are confident enough globally to have $3 trillion invested in NVIDIA. They see it as a valuable stock. They see it as something that has growth potential. And, Bitcoin has, to be fair, kind of been lumped in with a tech stock moniker. However, I could make a strong argument right now that Bitcoin is acting more like gold than it is a tech stock. And it's just lagging behind gold, and gold is going to pull it up to $100,000. Just by the structure, how similar Bitcoin structure is to gold compared to let's say some other random stock or even just the S&P. But being said, capturing the entire market cap of silver is pretty incredible, and I do believe that capturing the market cap of NVIDIA, that's kind of my technical target, conservative target, which puts it about 150K. The rough math is every $1 trillion added to the market cap rises the price by around 50,000. It's probably more like 53 or 54, but just to keep the math simple. So I'm always paying attention to market caps just to see what the global sentiment is. And certainly it is being perceived as a viable asset around the globe. I mean, of course, that seems like an obvious statement with the ETFs currently holding 1 million Bitcoin, but it is something to take a look at. Also, I wanted to make one more comment on some BTC trivia that I love when this pops up. Remember the $1,200 stimulus checks that came out in America in 2020? There was because Bitcoin is a public blockchain. There was a lot of evidence pointing to the fact that as soon as those $1,200 checks hit bank accounts, the Bitcoin was bought in chunks of $1,200. So a lot of people did buy. And I'm curious to know, I wonder if there's anybody in the chat that actually did that and still holding the Bitcoin. If they did, they are happy because that is currently worth about $14,000. So once again,
whoa,
you've got a 10x.
Whoa.
What's that?
No, that's awesome. So if you spent your entire stimulus check on Bitcoin and you held it, you turned 1,200 into 14,000.
Yep. In 4 years.
Has anyone tweeted this out yet?
Yeah, you know what? I think that there actually is an account. I think there's a Twitter account that tracks the stimulus check. I don't know how often they update it, but it is pretty interesting. I mean, if you think about it.
Yeah, go ahead.
I'm trying to think of what the price of Bitcoin was when those checks came out. It had to have been, just from doing the math, it had to have been maybe around $6,000 or something like that, maybe a little bit higher, 6 or 7.
Yeah, that makes sense. It would have been in, in the summer of 2020.
After the Bitcoin crash and recovery, and was still consolidating below 8K. That's probably when they came out. But I absolutely love that. It's just, sometimes it's hard. People get consumed with the price, and they think $30,000 is too expensive. But you have to if you're not trying to trade and you're just trying to figure out how to use it as an investment tool or a savings account, you just have to look at the percentage gains over time, rather than the specific prices. And use a strategy of just buying when you get a 20% dip in Bitcoin, almost whether it's a bear market or a bull market. That's usually a decent discount price if you scale it out to the next 4 years, to the next cycle. But I've been watching CME. CME really wants 90,000. CME is just holding 90,000. Spot price has been bouncing all around. One thing that has closed a little bit, Tone, is the gap between the CME premium. It's been around $300 or $400. When things were mega bullish, that premium was over $1,000 a couple times, more like $1,200. So current CME is 90,015. Spot prices are around 89,670. And oh, look at that. So you get the hourly chart pulled up. I love candles like the one prior to this current candle, because it's a topping candle, and if that wick cannot get taken out to the upside in the next few candles, it's going to run out of steam, and we'll see the price roll over at a lower high. But the CME close is looking bullish. Can I grab the screen share really quick, Tom?
Yeah, give me let me just finish up a couple of things, and I'm gonna hand the screen share off to you, which I should have done a while ago. So real quick, someone asked for the Indian rupee. It's definitely topping on an MRI monthly, and the MRI weekly is coming up in a few weeks. So this month you'll have a weekly inside a monthly, and the last time you had a weekly, it did pull back. But look, the trend is the trend, and here's the monthly Indian rupee, and your currency is just going to keep devaluing for the time being. Everything is devaluing against the US dollar, as I've been expecting for a long time. I'm expecting the US dollar to get very, very strong against all currencies. That's just always been my expectation for the US dollar, mostly because it's measured against the euro, which I'm expecting to completely collapse. That's the one thing I wanted to say. People are not happy with my exaggeration of a cell phone being $3,000 because it has 0.34 grams of silver, as someone mentioned. But my point is this: people that buy silver have 1,000 fucking excuses as to why they're buying silver, an asset that hasn't broken its all-time high of 1980. Inflation adjusted. You will see that the silver inflation adjusted all-time high is like $300. It's never breaking that, like probably ever, because if it ever gets that high up, that means inflation is through the roof as well, right? Like gold is literally at its all-time high, no matter how you slice it. Inflation adjusted, not inflation adjusted, doesn't matter. Gold is at an all-time high. Silver, look, $50 in 1980 today right? $50.19, $191 today, right? That is where silver needs to be to break its all-time inflation-adjusted high. Well, like, I'm sorry, guys, silver is a terrible investment. Gold in 1980, or like, I don't know, whatever the gold's all-time high is, it was 2 weeks ago. Inflation adjusted or not, all-time high was 2 weeks ago. That's an asset that goes up. Okay, silver is just not. It's so yeah, I'm gonna exaggerate a bit because people make these excuses that silver is used in industry and it's used in your cell phones and all this other crap, but it's just not a good investment.
Someone asked about MSTU. You want to take a look at that one?
MSTU. It's good to trade. It's volatile as hell. Yeah, I mean, if you want to trade it, if you want to hold silver for like a month, maybe, if you can hold it that long, it's great to trade for like a swing trade, like a week or two. Go look at what?
MSTU.
MSTU. Oh, the 2x Bitcoin ETF. Jesus. Holy shit. What the hell? What is happening?
You're on the monthly.
So is this one first traded? So the leveraged Bitcoin ETFs. Well, this is a leverage MicroStrategy, right? But someone asked a question about leveraged Bitcoin ETFs. Do they buy twice as much Bitcoin? No, they don't buy any Bitcoin. Leverage ETFs, they're not really ETFs. I don't know why they call them ETFs. They're like ETNs. They're generally exchange-traded notes. They use paper derivatives, like futures contracts and swap contracts, and they mimic the doubling of the underlying asset. So this is a paper derivative of MicroStrategy that simulates with cash and with like derivative contracts the doubling every day of the stock to the upside and the doubling every day of the move to the downside. These ETFs are very dangerous. I don't like to trade leveraged ETFs because when the market is very volatile and it swings up and down, they always lose. So they're only good. They're only good when you have a trending market. But when you have a volatile market, they're terrible. And it's hard to time a trending market. Sometimes you got to hold through a volatile period. And these leverage ETFs will absolutely kill you. So I prefer to just trade. If I need leverage, I would trade futures or options. I don't like to trade leverage ETF for leverage.
Well, that looks bullish.
Feral analysis. No one is suppressing the price of silver. No one cares. No one is suppressing the price of gold. Again, the suppression of the price of silver is a story made up by silver pushers who have been wrong on their decisions for 40 years. No one is holding back silver price. No one cares about silver. Like, no, that's not true. Like, no one is holding down the price of silver. All right. I'm still waiting for 90K. We're close. Oh shit. Here we go. Here we go.
It wants that wick bad. CME is pulling the price up. It really wants above 90.
Oh man, look at this 10-minute MRI top right here. And now we're on a green star candle. Oh, this is beautiful. How's the S&P doing? Not great. Oh wait, that's a weekly chart. The S&P is neutral. Just oh, that's not the S&P. Shit. Oh no. Where's my S&P chart? Shit. Hold on. Now I gotta remember which SPX I'm using. Is it this one? Yeah, it's this one. S&P is rallying. When did it start to rally? Okay, here we go. S&P is rallying right now. Oh, market's about to close. This is a race. This is a race. Market close or 90K? What do you think, Mark? We got 17 minutes. Also, I'm probably going to get going. Oh, shit. Well, yeah, you haven't even done your charts. God damn it.
We can just get a couple of quick things and then we can call it.
All right, let me stop my screen share. Go for it.
Oh, here's my camera all jacked up. I don't know why my camera's been acting up lately. You gotta allow me on.
Oh. Go ahead.
I'll just show a couple of things really quick. We can probably do this super quick. Here's the CME chart. Over here in the left corner, I'll zoom in on there, are some significant gaps. And you know, if you just eyeball the CME, this is why I'm still this is why I just feel that the CME gaps are important to pay attention to. Not all the time, but right here, August 23rd, there was a really nice gap open. Look, within just a couple of days, the price popped right back up to that gap, right up to it. And that is an area to either short or perhaps consider going long based on the TA at the time. But then it just went back down to lower lows. But here, I heard Tone say in his in the video you played earlier that you love breakaways at the lows. And here's a great example right here. This is going back to 2023 right here.
It's not that I love them. I never expect them to close.
Right. They're more, let's just say they're more likely to stay open. These are the ones that are more likely to stay open. So now it did come back with a wick. Now the stock market, here's one thing I've noticed. The stock market is very efficient at closing gaps with wicks. The CME closes gaps with candle bodies a lot of the time. It's maturing and wicks are starting to fill gaps. So we could make an argument, as I zoom in on this, we could make an argument that this was filled by a wick. But here's another breakaway gap coming out of this consolidation that's not going to fill. And then here is another one that was filled with wicks right here. We can see these wicks. So this is where I perceive Bitcoin to start to mature as an asset, because if you go back in history and look at a gap this large over time, it was absolutely going to fill with a full candle body, not a 4-hour candle body. I'm talking about a full daily candle closing inside of that gap. But here is the wick. Here is the gap that Tone was talking about on December 23rd. So Tone is perceiving the current gap that we have as something similar to this. And as we can see, if I put the date range on, it took 52 days and 3 significant higher highs before this gap was filled. So what we were suggesting early in the stream was that Bitcoin could rise to above 90K, 95K, even above 100K, still have one of those nice bull market 25% corrections down to fill this gap. So let's just take a look at where the CME is now, where that gap is now. This is a massive gap from $77,000 to 81. The chances of a $5,000 gap staying open, it's pretty low. I will have to agree with that. But I will say this. I highlighted, we got, Tone talks about time and price. And this area here in October, here we are in October, November, we see the price start to create these gaps that just barely filled with wicks. It wasn't until December that this massive wick was caught. So here's the argument I was going to make. Why I think there's a chance that that gap does not fill, because this is my chart that has been highlighting an accumulation on top of a massive accumulation. And this pattern, we've looked at it as a broadening wedge. We've looked at it as like a bull flag or a descending channel. There's many ways to look at it. I was looking at it as a broadening wedge, but also as a secondary reaccumulation on the top. But let's just take a look at what the price of Bitcoin did at the final SOS in phase E. This is the last sign of strength right here. So this is the breakout. This is Bitcoin topping above $70,000 right here. This is the equivalent of it. There was no chance to buy a dip from this breakout until January of 2024. So if we're looking at the current price action, we can see the exact same thing. And when on one of the recent streams, I said, Tone, Bitcoin is going into price chase mode. And we can kind of see this similar drifting up and this pop up. So yes, I do see it possible at this point to drift up around 95, 100K end of year, and maybe even in early January come back. But if we're using MRI, the MRI weekly is on an 8 with a top coming, and an MRI sell coming on the next candle. We run a warning candle now. Let me get rid of this. So, and another thing to pay attention to with the MRI is we do have extension A and C printed within this run. It's not suggesting sheer exhaustion, but it's saying pay attention. So from a timing standpoint, let's say we get a top on the 9, on the MRI top, 1, 2, 3, 4 candle correction. Yeah, look, that time's perfectly, Tone. Candle correction into the end of the year, beginning of January, and we have the very, very similar price action to 2023. So what do you think? You think that this is a scenario that we're drawing out that is pretty probable to happen? Pop up, top up, consolidate 1 or 2 more highs, and then finally, based on the weekly MRI exhaustion, make a drop. We also have these 60-day cycles that I look at. There will be a cycle low at the end of November, early December. So it's possible that we get a gap filled in. Basically, what I'm saying is that I'm not expecting the price to be in the 70Ks until December.
Look, I agree to a point. My view is the same as the videos I played, right? I think we're gonna top this week or next week before breaking 100,000. I then expect a pullback and no lower than 70, 71,000. But the pullback might also be only down to 81,000. Like, I don't know. And I don't have any timing for that pullback at all. So I try, at the moment, I'm going as far as stating the following. I think a top is coming in the 90s in the next 7 days, between later tonight and over the next 7 days. Maybe over the next 10 days. Maybe it will stretch out all the way into end of next week, but I don't think it will. I think we're topping late this week or early next week, or maybe we top on the weekend, which is unlikely. So I think either a top is coming later this week or early next week. I then expect a pullback. I don't know if this pullback is going to be quick and deep, long and deep, long and shallow. So you have time and price, right? The pullback could last as long as 3 months, or it could last as little as a week and a half. And it can fall all the way down to 70, or it could fall only to like low 80s. This is my range of expectation. So I could like draw another one of these boxes, right? It's going to be a very long box. And based on how it is pulling back, again, assuming it even pulls back, we could go straight up to 250,000 over the next 3 months as well, right? But assuming I am correct and we top in the mid 90s end of this week and we start to go down, I then start to analyze how far and how deep, how long and how deep the pullback is. But I do not even want to attempt to speculate when a price in the 70s is going to be reached. December, January, October of next year. I don't like analyzing that kind of stuff until I have officially declared that a top is in and the pullback has begun.
Yeah, that's fair. We, on the index chart, a new all-time high printed today.
It did last night. I mean, how do you define today, right? 2 a.m. today, sure.
Okay, yeah.
Right. So, I mean, I like based on the candle hour, 2 a.m. is today's candle, but in reality, 2 a.m. is yesterday, right?
So let me show you. So this is as far as what's going to happen in the next couple days, day or two. Let me show you what I'm thinking. This is super simple. I'm just going to put on the Bollinger Band. I don't even need to know what the MRI count is. This is textbook Bollinger Band TA right here. This candle closed above the top band. That is going to give a decently high probability of a new high on the next candle, which we saw, but also with the price closing so far above the top band, there's a good chance that the following candle is going to come down and test the top band, which we can see happens perfectly as the band rises into it. So now we've got a green candle closing, bouncing off the top band, and this is telling me to look for a higher high tomorrow. And it is, where is the CME? Let's see where the CME. This is another thing to consider, Tony. Sometimes, not always, but sometimes the CME MRI count is more important than the spot, sometimes. And this is only a green 5. So this is telling me to not look for a this is telling
either way, it's gonna top inside the week, right? Can you flip that chart on a weekly? I'm sure the MRI weekly CME will still top tomorrow, next week.
Right. So there's an hour and 13 minutes left in this candle. There's a really high probability this is going to close as a green candle above the band. This is telling me that tomorrow the price is going to go higher. And this is
we almost hit 90K. We're at 89,942.
And CME is at 90.4. Now, this week is going to close, barring some kind of major collapse. This week, even though it is a morning candle, we're going to get the MRI 9 next week. This is closing above the top band, very likely, which is telling me next candle next week could still print one more higher high. We'll see how this candle closes on Friday, but you're right. Now, Tony, one thing I want to bring up really quickly. One thing that I was not trusting any kind of breakout until at least minimum a week solid closing above both the CME prior all-time high in 2021 and the swing high all-time high. So this week will be one full week that's closing above both. Okay, that's freaking bullish. If I see 2 or 3 weeks above there, that is making 74K really, really strong support at that point. And I'm going to look for the price to go much higher. Let me show you really quick my mega bull chart. This is the most bullish signal that we are going to get probably, well, certainly for the rest of this year. However, we've talked about this before. The bands have never been this tight. I've gone back in history. They've never been this tight. This is the tightest, lowest volatility squeeze on this 2-week time frame that this candle closes in 5 days. It closes on Sunday. Look how high above the top band it is. It's $10,000 above the band. The top band is going to rise on the close. We could see a drop to test the band. However, this candle, along with the oscillator we've talked about, which is sitting at absolute extreme low volatility, record lows, is telling me that we have brewed. I'm just going to make a super bold statement. This is 100% move. This is technical. This is not pie in the sky. This is just a technical analysis based on what these oscillators and indicators are telling us. And if I zoom in on this, we are going to get confirmation of expansion with closing above the moving average. This gray is a moving average. So if we look back here at this last time we got this signal, this was, guess when? October 2023, on that last breakout we've been talking about. So that signal, once we got the cross, and then once we got the close above the top band, the price was 34,000. Let's just call it 35K. That move over time took the price from $35,000 to $73,000. And then we had one more recent historical signal right here. Same thing, very tight squeeze on the bands. Right here was a false signal, and we can see this oscillator turned back around and then created that secondary drop. Now, I do not think we're going to get a secondary drop this time. I think this signal is for real. I think this is a real breakout signal. I think that it's going to produce something more similar to here, or let me go back to October of 2020, where the volatility didn't drop quite as low. However, this signal began to unfold off of the COVID lows and the Bollinger Band squeeze. But I don't look for expansion until we start to see closes above the top band. That didn't happen until 14K. That took the price from 14,000 to 65,000. So can you understand why I'm seriously considering 100% move on this tone?
I do. I just well, I mean, when I'm looking at that chart, yeah, it looks like it can definitely run away. But I don't know. I guess I have a little bit of unit bias. I just find it very difficult for people to rush into buying Bitcoin at $110,000 like they did at 40.
Okay, so I have
and there's another caveat there.
Yeah.
And I remember Bitcoin at 40 earlier this year, or like early this year, Bitcoin was at 40. People were reluctant to spend their Bitcoin. Right now, everyone is like shopping for their Lambo, right? So you also have to remember that there's a lot of people out here that are ready to sell. No one wanted to sell at 40 and 50, at 35, right? I think this breakout is very different. I don't think that influx demand is gonna be that much greater than current holders that have been waiting for this, right? I think the only reason why we're not selling yet is because the move from 60,000 to 90,000 has happened so quickly. People haven't had time to pick the color of their Lambo. And I think selling is coming for Christmas and Black Friday deals.
You could be right about that. My counter argument to that is this. I do not believe that people who have been accumulating Bitcoin, and I'm not talking just about the ETFs. There is some serious accumulation that has gone on between March and November. Okay, I just do not believe that these people who have had this kind of conviction to continue to buy dips, and I'm one of them. I accumulated every single one of these drops. I can guarantee you, I can show you buys on any kind of significant drop, and I've got it in writing in my channels. So am I willing to sell after waiting all this time, a 23% move, 25% move? No, not at all.
No, but you can't think of it in terms of percentages, right? You were reluctant to sell and invest in shit at $40,000 a Bitcoin earlier this year. At $90,000 a Bitcoin, man, 2 Bitcoin can buy you a nice house. Even in America, outside of like LA, New York, Miami, you can go to Texas, you can buy a freaking, 5-acre ranch with like cows and everything, right? For like 2 Bitcoin.
Okay, so here is a theory that I have on where some of the market cap is going to come from, and you may or may not like where I'm going with this, but I've come to grips with the fact that the altcoin market does help fuel the bull runs. The way that money cycles through the altcoins and then back into BTC, it gets laundered and circulated through there a few times. So one thing I think that is really important to start watching right now. There's 2 things. Let me zoom this out. So this is my Bitcoin dominance chart. I'm not calling for an alt season, but I am saying that we are getting into a period that it is becoming the least riskiest to buy and hold an alt. Anyone who has been trying to buy and hold an alt through all of this, they've just got crushed and destroyed. But we can see dominance is starting to struggle in this 66% range. And we'll take a real quick look at FBTC and Sol F. And I'll tell you what my premise is. So now, if dominance pushes above 66K, it's wide open. There's really nothing preventing dominance to go to 72K. However, where we are in the cycle and how altcoins have moved in the past, and if interest rates are going to be getting cut and that is going to open up some liquidity, that is usually when the most speculation begins to take place on the altcoin market. And I've already seen several alts popping off and firing off as Bitcoin has made this nice little top. I'm not convinced that this is it. I do think dominance is going to go higher. But really quick, let's take a look at FBTC, which has just been decimated. And I've got this horizontal here that goes back to 2020. It's over 4 years old. And just as Bitcoin dominance is coming into a main level of resistance, ETH BTC is trying as hard as it can to hold on to this support. If it cannot, it's going to go to lower lows. Now,
it won't. It will not be able to hold out support. It's going down.
I agree. I think it's going to go down too. At least for a while longer. Solana versus Bitcoin still needs, from where it is currently, it's stuck in this range. It has been in this range. I understand Solana is bullish. I understand Solana is probably going to be a strong mover. It's still not telling me to exit Bitcoin and buy Solana, which I would never do. But
Mark, be careful here, right? Like, I think Solana is gonna break that all-time high because it's not Bitcoiners buying Solana. It's the rats jumping off the Ethereum ship.
I was just about to get to that, Tone. So, but my point is this: it still needs another 95% move to get to a new all-time high versus Bitcoin. Okay, but yes, once Solana breaks this level of resistance, it's basically going to have open sky to try for an all-time high. Here is the biggest chart, in my opinion. This is Solana versus Ethereum.
Oh, yeah, there we go.
Okay, so it began to print new all-time highs as far back as August, but it basically has lingered. And then we can see here, when I zoom in, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like good 12 knocks on the door and creating somewhat of a bullish inverse head and shoulder pattern. Now I'm on the weekly chart. 1, 2, 3, 4. This is what I want to see with Bitcoin on the CME and spot all-time high. I want to see 4 weeks consecutively closed above the all-time high. But this is just what you said, Tone. This is people jumping off the Ethereum ship into Solana. All of this is to say this. There are going to be some alts, including Solana, that are going to see some very, very strong US dollar gains. And Solana might even trend strong versus Bitcoin. So that is going to generate billions of dollars, billions, that will flow.
Yeah, well, also remember, right? So look at Doge. Pull up Doge.
USD or BTC?
It doesn't matter.
We'll do USD real quick because it popped like crazy.
Right, but it would have popped against Bitcoin as well, right? Why did this happen? Well, this happened because Elon Musk won the election. Yes, I know what I said. And right? And so the other day, Charles Hoskinson tweeted out that he is going to get selected onto the Trump's, crypto analysis team, right? So look at Cardano.
Hold on, before we get off this real quick. Yeah, I mean, off of just these lows without the wicks, it's spiked 360%. Like,
Right. Look at it versus Bitcoin, actually. Pull it up versus Bitcoin.
So currently, it only needs 30% move to get to new all-time highs, going all the way back to 2021. Now,
that's easy. That's easy. It's probably it might actually come close to hitting $1 one day. But I'm not buying Doge. This is not trading advice at all, right? But
I think I actually think this cycle it's going to $1. Like, it's not a meme anymore. And you know what?
Probably.
I don't even hate Doge because Doge didn't try to be anything except for just a meme coin for fun. So
yeah, but I would love to see what happens to Doge when Litecoin mining implodes, because that's how Doge mines its coins. It doesn't even have its own mining. It's dependent on Litecoin mining, which is gonna just disappear one day. And then what's Doge gonna do?
So my point is this. This is helping to strengthen my argument. My point is, there are many Doge traders that are going to make a lot of money. They're going to bank some dollars. They're going to have stable coins, and they're going to want to buy dips in Bitcoin as the altcoins continue to rise. So this is going to fuel market cap going into prices above $100,000.
Oh, right. No, I agree. That's why I think Bitcoin market cap, while it is Bitcoin dominance, is going to go to 90,000. I think it's done gapping. I think it's now just going to very slowly trend to 90% over the next decade. There's not going to be these 5% jumps. So here's Bitcoin versus Doge. And I think it's breaking out, man. I think it's gonna break the last swing high.
Yep. There's a nice.
I'm not sure why that line's there, but
well, it was on lower time frames. But if you look, this is a classic altcoin pattern that plays out over and over and over and over again. Right here, I could adjust this, but this is actually a really painful bump and run that broke out and then did nothing but create lower lows again. However, it held, and now we're finally getting that move. So Doge is one alt that made a new all-time high versus Bitcoin. It's going to need another, let's see, 200% move to get back to the all-time high. Do you think it will break it, Tone, on this cycle? Do you think
all-time high? Probably not, but I think it'll break the prior swing high.
This swing high?
Yeah. Maybe not the wick, but I think it'll challenge the close.
So Doge is officially in an uptrend on weekly. It printed a low here. It printed a higher high here. It printed a higher low in this range, and this is a very convincing higher high. So
Yeah.
I'm not bearish on this. You know,
Yeah, no, but you can't. I mean, Doge can break its all-time high. It could. It is just but that's the thing, right? Doge breaking its all-time high only exposes how stupid the shitcoin market is, right? Like how can you take Solana seriously or Ethereum when Doge is kicking their ass? And it's not like it's a random statement by Elon, right? Now it's like, well, Doge has been kicking your ass for the last 6 years. What do you have to say about?
so this chart is a weekly chart of the F market cap dominance. It has lost 30% of the market cap dominance as Bitcoin has risen up to $90,000, and it's still not put in a very convincing low. There's a possibility that this goes even lower. This is altcoin dominance, excluding the top 10, which would also include probably Solana, Bitcoin, and Ethereum. Same thing. Like, I don't see anything. I just don't see anything bullish in this yet. I don't see it's printed. It's a lower low on the weekly. It hasn't swung to any kind of significant high. So there is no real alt season yet. I do believe that we will see alt season in 2025. I do believe that some of those gains are going to fuel Bitcoin on the dips. It's just part of the ecosystem. It is how money comes. It's how money circulates within this sector without having to come from outside sources. Retail, people buying Bitcoin, ETFs buying Bitcoin, whatever. And if we look at where here, let's see where total market cap is at 3 trillion. So the total market cap has not quite yet printed a new all-time high. It literally double topped up to it. Once it does, just like we are with Bitcoin, I'm going to be looking at the 1.618. So we're looking at another almost $1.5 trillion coming into the crypto space once this total market cap all-time high gets broken. Which,
Hey, Mark, I do have to get going. We have to wrap this.
And actually, that's about all I really wanted to talk about anyway, Tony. It really is.
Well, I was just going to mention that Cardano also popped over the last couple of days because the founder of Cardano decided to call upon himself to announce he's going to be part of, Trump's crypto team. And then you look at something like Litecoin, right, which crashed, right, because Litecoin doesn't have Charlie Lee. No, you got to look at it versus Bitcoin, versus the dollar. Now, these things are totally meaningless versus the dollar.
Why isn't it showing up on like
LTC?
Oh, thank you. Oh yeah.
Right. So Litecoin totally crashed. It's almost at my 80% down target since the halving. That was my announcement, and we're almost there. It's crashing because the CEO and chief master and commander of Litecoin doesn't come out and announce that he's going to be part of Trump's crypto team, right? But the master of Cardano can, and the VCs of Solana can, and now it's going to be basically people investing in shitcoins based on which masters and commanders of these shitcoins will be part of the future regulation of scam coins, basically, right? And that's all it is. So people think that this is great for the big VCs of Solana, and I guarantee you, if Vitalik comes out tomorrow with a tweet that he spoke to Trump and he will be advising Trump on shitcoining, then I will change my mind on Ethereum. But that's basically it, right? Like, at the moment, your bet on a shitcoin depends entirely on on the leader's connection to Trump. Hence, Doge is going to be pumping because you know Elon Musk is on Trump's team, and he's pretty much the leader of Dogecoin.
Tone, let's give some hopium to the Cardano maxis. They just need a 1,260% move to get back to all-time high.
Yeah. Okay. All right. On this note, we could not break 90,000 on the index. We broke it on Coinbase. We do have to go. We tried. The stock market is now closed. You're not going to get this last minute pump. Now we have to depend on Asia. And last night, Asia dropped the market. We'll see what happens tonight. I did not exit my trade. I am going to trust the MRI and the top to come late tomorrow afternoon or Thursday. I'm holding on to my trade. And maybe if we're pumping, I would love to hold it out until Friday afternoon. But I am planning to exit later this week, no matter what the price is. But as I said, we needed to be above 88,000. If we're above 88,000 tomorrow morning, I'm still expecting 93, 94 this week.
I would agree with that. And based on the CME daily close, I'm saying that we're going to see another all-time high tomorrow.
I'm liking the comments. Rusty says, I love Tone's commitment to hating altcoins. He can't even control his hatred of them. That is true.
Oh, it's fun. It's fun to pull them up. And you know, when you think about it, I don't even know how many altcoins are in the market. I have no idea. But we highlighted one or two that might make a new all-time high versus Bitcoin, right? It's like, yes, you can make a lot of money in the bull markets. You can buy the alts if you know exactly how and when to time it. But as you said in your earlier stream, does that actually beat just buying and holding Bitcoin, right? Because if your altcoin trading and your altcoin strategies are not beating just buying and holding Bitcoin, then what are you doing?
Right.
Just buy Bitcoin.
Yep. Couldn't agree more. All right. I got to run. Mark, thanks so much for joining us. And you got to stop your screen share. I'll close us out. We're pumping again. 88.9. We're back to 88.9. Oh, man. Wait.
88.914. Let's see.
Wait, 88.9, not 89.9. Never mind. We're not pumping. Never mind. Sorry, guys. Missed a digit there. All right. Thank you all for watching. See you all on the next one.
All right, Tone.
I got massive travel coming up. I got adopting Bitcoin. I got a lot of poker to play. I got to host poker. Man, I don't even know if I can do streams the rest of the week. We'll find out. Bye, guys.